Let's now welcome in the management at creditaccess. Grameen, Udaya Hebbar, MD and CEO at creditaccess Grameen is with us. Sir, let's talk about the business. Last 3 years, liability side has been an issue, or we can say since IL&FS, liability side has probably been an issue. IL&FS and Yes Bank issue happened. Now we are seeing NCDs going through quite, normally. We're seeing the markets open up quite normally. How has creditaccess used this normal bond markets to grow from here
on? Thank you and good morning. While there was some issues for NBFCs due to IL&FS or Yes Bank issues, but creditaccess Grameen never faced any issues in terms of liquidity because our liquidity profile is quite strong in terms of the banks, the long-term institutions like CDB, NABARD, international funding, what we managed to achieve over a period of time, which actually supported us throughout all these 3 years with the positive ALM. However, as for our next decades of growth, we continue to strengthen our liability profile. That's why one more avenue we actually stepped into this NCD zone, which helped us to start our first journey today. It's a fantastic journey. There's a very good support from the retail investors, HNIs, and the institutions, and it was oversubscribed within 2 days of time, almost 1.5 to 2 times actually, which gives us immense pleasure to say that there's a huge demand for this kind of NCDs. If we are able to perform better, we'll be able to get sufficient strength or support from the liability side also, which will make us positive in terms of our ALM, positive in terms of the profile, liability profile, positive in terms of our cash flow. This will further help us to strengthen our position in liabilities.
Point, sir. Sir, now when we look at the rates in the system, they are going up, and initially, probably you could pass them on and your cost did not go up. But how would you look at NIMs going ahead? How would you do the asset liability management to make sure that NIMs don't have an effect of a higher rate in the system?
See, actually now we are able to price so efficiently and so what you call very, very responsibly by ensuring that minimum of the cost of borrowing is transferred to our customers. But in the meantime, we are able to maintain the lowest pricing to our customers in the entire industry, which includes the banks, SRBs, NBFCs and MFIs together. In all the segment together, probably we are the lowest pricing to our customers with the efficient management of our liability. Probably by doing this continuously, we'll be able to be more competitive in terms of pricing and also maintaining our NIM. I think if you look at our Q2 performance, our NIM was close to 12%, and probably we'll be able to maintain that. Even though there's a small price increase, we may still be able to pass to clients, and despite being very competitive in pricing to our customers.
Right. A very good afternoon, sir. This is Cheryl also joining in the conversation. And H2 usually for the financial sector is usually very strong. You have already spoken about the guidance that you have for FY23, but if you could shed some light on how much of an uptick do you see in H2 when you compare it to H1?
Normally in microfinance, 40%, 60% is H1, H2 actually, but this year probably it is 35 and 65% because of the legacy process of last 2 years. FY21 and FY22, first half there was not much business because of COVID. Automatically the renewals will be lesser in the first half of FY23. Therefore, entire thing of growth will be coming from H2 actually. Therefore, the pent-up demand and the renewals and the new customer acquisition, everything is going with a very, very, very good speed. Full swing, things are moving. Our view is that we will have very good progress in the HY2. Our 65% of growth should come from second half, and we are on the course of achieving the guidance what we've made, and we don't see any challenge to do that.
Got the point, sir. Sir, there are two things. We've spoken about NIM, we've spoken about the growth outlook. Second is about asset quality. Of course, this environment is such that nobody is reporting asset quality. We are not hearing news flow that a lot of corporates are getting bankrupt, people are not paying, bounces are increasing. But still, as a company level, you have to maintain your asset quality checks. So how are you doing that? And from which segment are you seeing new demand coming in, which probably you were not lending earlier, but now you would be considering the good macro environment?
See, we are in microfinance business. Our main business is to provide, create capital in the bottom of pyramid. That's what the only business we do, and which is doing very well. And then we are not in the corporate segment. Therefore, we completely work in the low income households. And we always observe that the poor won't default. The default is very minimal. Our credit cost we guided is about 2%. I think this including the legacy cost of COVID of last year. So I think still again we are quite on course of achieving that kind of controlled credit cost, and that we are not seeing any incremental impact in the current year in any part of our business. So therefore, we are quite pleased to tell that we should be able to achieve the controlled credit cost for this financial year also.
All right, Mr. Hebbar, we'll leave it there. Thank you so much for joining us on the show to talk about the growth prospects and also that NCD issue as well. And that was Mr. Udaya Kumar Hebbar, who's the MD and CEO at Creditaccess.